Hello everyone, I'm Yu Zhehe, and this presentation is talking about stock analysis and investment recommendations for CentOS. The focus is on embarking on journey to comprehensively analyze CentOS Limited, that is one of the prominent player in the oil and gas industry. This presentation is revolved around conducting a thorough stock analysis and delivering a well-informed investment recommendation that aims to guide potential investors in their decision-making process. The purpose of this presentation is multifaceted. First of all, it aims to provide a holistic overview of CentOS, shedding light on its background and industry positioning. It also dives into an in-depth financial analysis by dissecting key financial metrics in order to gauge the company's financial health and performance. The ultimate goal is to present a clear and compelling investment recommendation by specifically both financial and strategic aspects for CentOS. This presentation serves as a valuable resources for potential investors seeking to make informed decisions in the dynamic world of financial markets. The objective is to provide a well-rounded assessment that it adds to investors in aligning their objective with the company's outlook. The subsequent slides are going to dive deeper into each of these key areas. CentOS has a rich and storied history within the oil and gas industry, as it was established in 1954. It has grown to become a significant entity in the energy sector by garnering a reputation for its expertise and exploration and sale of oil and natural gas over the decades. The company's operations are multifaceted, spanning various segments and regions that reflect its commitment to extracting supplying energy resources to diverse markets. The company operates across distinct segments because of the comprehensive approach to meeting energy demands globally. The company has solidified its stand as a major player in the global oil and gas landscape. Specifically, we talk about in terms of industry and market positioning. The company commands a notable market share and is recognized for its proficiency in fulfilling energy needs by reinforcing its influence and reach within the industry. First of all, we delved into the financial heart of CentOS by exploring its revenue trajectory and profitability dynamics. The yearly revenue figures for CentOS depict a progressive trend, reflecting the company's financial performance and growth. The company generated approximately $2.41 billion in 2017, which increased about $2.83 billion in 2018. Subsequently, in 2019, the revenue remained steady at around $2.74 billion. A significant surge was observed in 2020 by reaching about $3.52 billion that demonstrate a robust growth trajectory. The positive movement continued with 2021 showcasing a substantial revenue for approximately $6.48 billion, signifying a considerable leap compared to the preceding years. This analysis provides a fundamental basis for evaluating the financial health and trajectory for CentOS. Now let's discuss net profit margin. That is one of the critical profitability indicator. CentOS experienced a negative net profit margin of minus 11.3% in 2017. However, over the years, there has been a positive shift. The net profit margin climbed to 13.6% in 2021 that highlight a commendable improvement in the company's profitability. Alongside these figures, it's important to explore other relevant financial ratios for profitability assessment, including gross profit margin, operating margin, and returns on equity. Those ratios provided a comprehensive view of CENTO's ability to generate profit and manage expenses efficiently. Remarkably, the company rebounded in 2021 with a robust gross profit margin of 38.3%, suggesting successful strategic adjustment. An even more impressive margin of 51.1% was achieved in 2022 that showcase a positive trajectory and solid financial health. However, challenges emerged in 2020, resulting in a negative margin of minus 8.7%, likely due to extraordinary circumstances. The following year, a recovery to 24.9% indicates adaptability and resilience. It's essential to juxtapose these margin figures with industry medians as gross margin, operating margin, and net margin. This comparative analysis provides insight into the company's performance relative to industry standards, aiding in a comprehensive evaluation of this financial standing and potential competitiveness. The quick ratio of CENTOS reflects its short-term liquidity position standing at 1.79, 1.05, 1.42, 1.57, 1.44, and 1.35 for the year 2017 through 2020. It indicates the company's ability to meet immediate liabilities. Concurrently, the current ratio highlights the company's capacity to cover both short-term and long-term obligations. On the other side, shifting focus to solvency, the SAS ratio was recorded at 1.92, 2.01, 2.15, 2.44, 2.20, and 1.94 from 2017 to 2020 that imply a balance between assets and equity in funding operations. The debt-equity ratio recorded at 0.55, 0.68, 0.58, 0.69, 0.59, and 0.37 over the same years. This signifies a moderate reliance on debt for capital, indicating prudent financial management. In addition to this, the debt-to-capital ratio ranged from 33.7% to 22.5% between 2017 and 2020, demonstrating a declining trend, suggesting an improved capital structure and reduced financial risk. Comparatively, industry benchmarks for those ratios reveal distinctions. The industry quick and current ratio are lower that suggest potentially lower liquidity than the company. Conversely, the asset equity and debt equity ratio for the industry differed from those of the company, indicating varying capital structures and solvency positions. The AR turnover that represent how efficient receivables are converted to cash showed a constant trend as in 2017, the ratio stood at 7.7, gradually declining to 6.1 in 2020, and then notably surged to 8.5 in 2022. Conversely, the fixed turnover ratio fluctuated midly over the years by ranging from 0.27 in 2020 to 0.38 in 2022. Comparatively, the industry median for AR turnover and fixed asset turnover stands at 10.7 and 1.1 respectively. CENTOS performance in this ratio suggests a room for improvement to align with industry standards and enhance operational efficiency. Additionally, the ROE represents the company profitability in relation to shareholders' equity, indicate a mix of challenges and growth opportunities. Likewise, Practice ROA exhibited fluctuations by reaching its peak at 10.05 in 2022. This metric offers insights into the company's financial viability and potential returns for investors. CentOS exhibits a price-to-earning ratio of 9.72 and enterprise value to earning before interest, tax, depreciation, and amortization ratio of 4.53 in the trailing 12 months. Comparatively, the industry median value for PE and EV stand at -3.15 and -4.05. Respectively, it indicates that CentOS has a favorable valuation based on PE and EV compared to the industry median. On the top of CentOS present an attractive dividend yield of 3.87%. It showcases CentOS as a potentially lucrative choice for dividend-seeking investors within the industry. In addition to this analysis, further, CentOS displays a price-to-earning to growth ratio of 3.2, price-to-cash flow ratio of 4.56, and price-to-book ratio of 1.14 over the trailing 12 months. In contrast, the industry median values for these metrics are 6.96, -4.86, and 1.25. The comparison underlines that CentOS may be undervalued in terms of PEG and PCF compared to industry, while its PB ratios align closely with industry standards. Hence, this valuation metric suggests that CentOS is positioned competitively in terms of PE, EV, dividend yield, PEG, PCF, and PB ratios, offering potential investment opportunity in the industry. When it comes to the business key and business strategies, CentOS will consistently diversify its operations and expand its geography reach, notably with projects in Papua New Guinea and Northern Australia. This strategy aims to mitigate risk and access new markets. The company has strategically focused on liquefied natural gas production, capitalizing on the growing global demand for cleaner energy sources. Major projects like GLNG in Queensland highlights this focus. In addition, it's dedicated to enhance operational efficiency by leveraging technical advancement and optimizing resource allocation process. It's at the core of CentOS strategy, encompassing environmental stewardship, social responsibility, and governance. The company aims for sustainable energy development and community engagement. On top of CentOS exploring opportunities in incorporate renewable sources into its energy portfolio given the global shift towards renewable energy. This move aligns with sustainable energy practice and evolving consumer preference. It plans to invest in cutting-edge technical in order to reduce costs and improve decision-making process. The company is also actively seeking partnerships and collaborations to strengthen its market position, share expertise, and jointly invest in promoting projects. CentOS emphasizes agility and adaptability to respond to market dynamics effectively. This includes adjusting strategy swiftly in response to regulatory changes, geopolitical shifts, or fluctuations in energy demand and supply. It indicates that the company aims to remain a key player in evolving energy landscape. CentOS represents a compelling opportunity for investors looking to venture into the oil and gas sector. However, it's crucial for investors to conduct through research by considering their risk tolerance and align their investment objectives with the recommended position. The present analysis lead us to believe that Santos holds the potential to provide attractive returns for investors who opt to make a purchase. That's it. Thanks for listening.